Well, sorry for not posting a video this weekend, but my wife and I were up in Boston celebrating her birthday. So it's been quite a long weekend, and I wanted to get this at least started recording before the market opens in about 30, 40 minutes or so. It's 8:50 a.m. right now, Eastern time. So let's just skip all the formalities. I'm going to jump right into it, and let's take a look at how the market's been performing and what it might mean going forward. Let's take a look. Well, if we look at equities over the past week, you can see it was not a good week. ARK finished last, NASDAQ second to last, small caps, S&P, and the only thing that was up was the Dow. So this is a very unhealthy stock market with the Dow finishing the best, in fact, up. Everything else down. Now, it says people are still putting their money into equities, but they're putting them into safe equities, not riskier equities. So not a good risk appetite. What about over the last month? Well, over the last month, you can see things have just collapsed. But again, the Dow is in first place and the only one that's up. And then if we look at year to date, it still looks pretty good, but things are starting to collapse here. Now, is this just a normal August? It's vacation time. I'm not going to pay any attention. I'm just going to put everything in safer equities and move on until September. That's kind of the way it's looking to me, but we'll have to wait and see. And how do the current bottom dynamics look? Well, this is kind of interesting. We had almost a bottom forming indicator here. You can see this orange line was right up here at 100%. But the confidence level was falling off. So no real bottom forming indicator, if you will. Doesn't mean we have to have one. I mean, we haven't had much of a pullback here. I certainly hope this doesn't mean that we're going to pull back even more and get a bottom forming indicator. But you can see that the confidence level's falling as this is up here. And this is starting to rise, the bottom confirmation indicator starting to rise. So my hope here is that with a falling confidence and this way up here, that it's not going to stick and that the market's going to turn around and move higher. Hopefully that'll happen soon, but I really don't hold out much hope until, Labor Day or after, when everybody sort of gets back to it. And if we look at the old metrics, these are in a great place. You've got risk in this red line dropping. It's down here below 50. That's crazy low. I don't get worried until this thing's up here above 80. Risk accelerations down here at 20 and heading lower. This looks great. And the opportunity level, the blue line, is above 80, which is great. That's what you want to see. So this looks really, really good. And if we look at the new metrics, it's not a bad look at all. We've got risk, the red line, way down here at 20. Risk acceleration is heading higher, which is not good. But opportunity has also sort of turned the corner here and is pointing higher. So this doesn't look bad at all. Okay, so if we take a look at equity versus safety, the Qs have been up here. The NASDAQ 100 has been up here in first place. Prior to these three, it was up there for, 12 weeks, 15 weeks, some crazy number. But you can see what's happened here. It pulled back, went back up, down, and now down further. This is really not looking good. And if we take a look at cash always tells us the story. I'm just going to start back here. It kind of went sideways down here in sixth place, moved up a little bit, moved up a lot, and now it's in first place. This is not good at all. And then if we look at the Dow's in second place. So again, there is an appetite for equities. It's just safer equities, consumer staples, industrials, Dow-type stocks, not the NASDAQ 100 or small caps. So this is an unhealthy looking risk appetite. And then you have the Treasuries, which are also in an unhealthy place. You've got the longest duration Treasuries, EDV, down here in 10th place, and you've got 20-year Treasuries in 7th. So this is not a healthy looking Treasury market. We did have a healthy Treasury market way back here. You can see EDV, TLT. This is the order you want to see. These were healthy. Equities were healthy up here. Now we have unhealthy equities, unhealthy Treasuries. And how does this show up in the buying and selling pressure? And by the way, When we go through these, you're going to notice that everything is down, again, except Bitcoin. So if we look at the buying and selling pressure, you can see that the selling pressure really peaked out here for the Dow, and the Dow has actually been doing okay. It pulled back here and then has been kind of going sideways to slightly up from this bottom here. And the selling pressure dropped and the buying pressure is starting to increase. So this looks promising. Look at the S&P 500, similar picture except the price is dropping here instead of flat to slightly up. But again, the selling pressure is falling, buying pressure is starting to come up. NASDAQ 100, not a good look, as you can tell. Downward price movement, selling pressure well above the buying pressure, but again, collapsing here while the buying pressure comes up. If we look at ARK, innovation, selling pressure way above the buying pressure. So a lot of selling in the innovation space and the riskier tech stocks. And the buying pressure is down here at 0. So this is hopefully an end point and things will start to improve from here. And if we look at the Russell 2000 or small caps, very similar pictures. Declining price, selling pressure well above the buying pressure, but the selling pressure is falling, buying pressure starting to come up. Now let's take a look at sector rankings and rank acceleration, because these give a really interesting picture of what's happening in the market. You can really see the undercurrents here. If we look at this top table, this is last week, and you can see that Bitcoin was in the #1 position. Makes sense, right? It's the only thing going up. But we had technology, semiconductors, NASDAQ 100, technology, consumer discretionary, way up here, consumer staples here, cash down here. So this looks really, really healthy. This is a contrast, a total contrast to everything I've shown you so far. Now let's take a look at this week. Again, Bitcoin in the #1 position. The NASDAQ 100 in the #2 position. This doesn't make sense given everything else I'm seeing. Technology here, consumer discretionary still here, but you can see that consumer staples has moved up a notch and cash is staying put here. So this isn't really telling us much. Let's take a look at the new metrics sector rankings. So if we look at the new metrics, you can see instead of Bitcoin being #1 back here, ARK Innovation was up at #1 last week, followed by semiconductors, followed by Bitcoin and the NASDAQ 100, and consumer discretionary was way up here. Cash was way down here, and consumer staples way down here. So if we look at this week, Bitcoin has moved up to #1, no surprise there. What does surprise me is that ARK Innovation is still up here in one of the top positions, followed by semiconductors. Consumer discretionary moved up and cash moved down. Consumer staples stayed put. So this looks very healthy. This doesn't make any sense given everything else I'm seeing. And let's look at rank acceleration, because these move much more quickly and kind of give you a sense of where things are headed rather than where they've been. And if we look at last week, again, technology ranked #1. We had emerging markets, emerging companies, gold down here, cash way down here, but consumer discretionary way down here, along with consumer staples. So this is kind of giving you a mixed picture last week. And if we move to this week, you can see that it's showing a degrading appetite for risk. You can see consumer staples moved from way down here to way up here, although consumer discretionary also moved up a bit. Cash moved up a little bit. You can see last week we had stocks, semiconductors way up here, but the Dow was ahead of the NASDAQ 100. Well, this week, the Dow is in second place. This is saying there's a risk appetite, but for safer equities. The NASDAQ 100 has moved way down here, and stocks is almost all the way at the bottom. This is a really mixed up, confusing picture. It's sort of rudderless, if you ask me. And if we take a look with the new metric, we had Bitcoin in first place, ARK Innovation here last week, and consumer staples up here, consumer discretionary down here, cash up here. Now, what I like is that when we move to this week, cash has moved down, but consumer staples has moved up, while consumer discretionary has moved way up. We still have Bitcoin in first place, but you can see the Dow is way up here. And if we look at how Treasuries have performed over the past week, not very good. This is very unhealthy. The longest, highest risk Treasuries finished dead last, and all of them finished down for the week. So this is very unhealthy. If we look back over the past month, again, unhealthy. And if we look at year to date, we are just about at the bottom here. And if we look over 5 years, we are again approaching the bottom that we saw back here in October of 2022. So if you're a contrarian, this is a great time to be buying long duration Treasuries. And how does this show up in the buying and selling pressure? Well, you can see there was a flight to safer Treasuries back here. These short duration Treasuries were rising in price and the buying pressure well above the selling pressure. Not the same picture for longer durations. If we go to intermediate Treasuries, they were falling in price, selling pressure above the buying pressure. 7 to 10 year Treasuries, again, selling pressure above the buying pressure until just recently, but the price was falling. And then 20-year Treasuries, selling pressure above the buying pressure, but the selling pressure is falling and the buying pressure is going up. And what about that inverted yield curve? Well, actually I pulled up the wrong graph, but let's talk about it. So this is the yield curve. You can see where it was a year ago, this light blue line. And then a month ago was the red line. So it was more inverted than it is now, which is this dark blue line at the top. What you want to see is you want this to uninvert, which is what you had back here a year ago. We're not close to that. And if we look at the Fed rate monitoring tool, still the majority feel that the Fed will keep interest rates flat when it meets on September 20th, 2023, in a little over a month from now. So let's take a look, though, at how the yield curve itself looks. So if we look at the yield curve, you can see back here in March, it was inverted by 1.1%. It was awful. We were again severely inverted here, again here, and now we're sort of coming back, but we have a really long way to go before this uninverts. And what about gold? Well, you know what? If inflation was an issue, you'd think gold would be doing really, really well, and it has not been doing well. You can see the price has just been falling. The selling pressure has been increasing, the buying pressure decreasing. So right now, I would say gold is not a good place to be. And what about Bitcoin? Now again, Bitcoin has been the place to be. You can see that it bottomed out back here and has been steadily increasing over the last couple of weeks. And you can see that in the buying pressure, which bottomed out here and has been increasing, although as of this past Friday, it was on the decline while selling pressure was starting to increase. So let's see, it's 9 o'clock. So the market opens in just about, let's see what time it is. How do I get rid of this? Let's bring up my clock. Okay, so yes, it's 9:08 a.m. So the market opens in just a little over 20 minutes. And, what can I say about this? Well, it's really a rudderless market. There are some indications that look healthy. Most indications look mixed. Everything's going down except for Bitcoin. I think we just got to ride this out for a couple more weeks till we get to Labor Day. And then I'm not saying the market's going to go up after Labor Day. It could go down when everybody comes back. But I think that's going to set the direction. And until we get there, we're not going to know exactly what's going on. I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
It's gotta be you. You got that fresh look, long curves. You got my head turning time and again. You got that something I need. You got me thinking it's you I'm missing. I've seen the world, but nothing's better than loving you, girl. I've been waiting time and time again. I've been searching, and nothing else will do. It's gonna be you. searching, but nothing else will do. It's gotta be you. It's gotta be you.